Hi, in this video I will be discussing some of the problems and solutions in double entry accounting systems. Before we move on to the questions, I would highly recommend you to go through my previous video on Introduction to Double Entry Accounting System for better understanding. Now let's move on to the question. Prior to that, please go through the basic rules that I discussed in my previous video. So we'll just recap what we have discussed in the previous video. First and foremost, you should know that every transaction will have a dual impact. So every transaction will have a dual impact. And if you debit one account, the other account should be credited. So what is the rule? If you debit one particular account, the other account should be credited. So if you debit this side, the other account should be credited. This is the basic rule. Then you need to identify the two categories of account. So what is the type of account that you are going to debit, and what is the type of account that you are going to credit? So these two categories of account should be identified. Then simply apply the rule. So what is the rule? If it is an asset category, increase in asset should be debited. So this is debit, this is credit. And decrease in asset should be credited. When it comes to expenses, also you need to debit. Increase in expenses should be debited. Decrease in expenses should be credited. On the other hand, when you take equity, revenue and liabilities, so what you need to do? Increase in equity, increase in revenue, increase in liability should be credited. On the other hand, decrease in equity, decrease in revenue, decrease in liability should be debited. So these are the basic rules in double entry accounting system. Now, based on this accounting rule, let's move on to the questions and the solutions. Now let's quickly go through the questions. The first question is, Mr. Seram invested 500,000 and started his business. So Seram is the owner of the business. He has invested 500,000 in the business. Now to record this particular transaction, you need two accounts. So remember the double entry accounting rules. There is a dual impact in each and every transaction. So therefore you need two accounts. So let's open two accounts. So this is the debit side, credit side. This is the debit side, credit side. Now the investor has invested 500,000. So business will receive cash. It's an asset. So therefore you need an asset account called cash. So let's open cash account. And who has invested in the business? The owner. Owner represents equity. So therefore we need equity account. We need equity account. Then the 500,000 is received by the business, so therefore asset will increase. Apply the rule, accounting rule. Increase in asset will be debited. So therefore you need to debit the cash account 500,000, and you should give the reference to the other account. So you need to put the date here. You need to put the date, let's say 1st January, and the reference account name should be given. So since the amount has been invested by the owner, so the equity account should be credited. So why you need to credit? He had invested money, the business has to pay back money back to the owner. So therefore there's a liability, increase in liability should be credited. So 500,000. So what is the reference in cash account? It should be equity. And the reference in the equity account will be cash, 1st January. Now let's move on to the second transaction. He borrowed 250,000 from a bank. Okay, so here to record this particular transaction also we need two accounts. So what are the two accounts we need? He borrowed 250,000 from a bank. See the impact, see the dual impact. The business will receive cash 250,000. So therefore we need cash account. Cash account is already there. So you don't need to open another account because cash account is already there. And he received this money from the bank. We need to pay back to the bank. So therefore there's a liability. The bank account has to be created. So let's open a bank account. Debit, credit. How much the business has received? 250,000. So therefore, since business has received to the business, the asset, the cash asset has increased. So therefore, increase in asset should be debited 250,000. So we can say 2nd January. Bank account, what is the reference? Bank account. And the bank account should be credited. The liability towards the bank will increase. Increase in liability should be credited. So 2nd January, cash, the reference account is cash, 250,000. Third transaction. He bought $200,000 worth of inventory for cash. He paid cash and he bought inventory. What has happened? Here, the cash asset will reduce. Why? He is taking the business cash and is paying to purchase inventory. So cash account will reduce. Decrease in cash, decrease in asset. So decrease in asset means should be credited. So cash account should be credited, where you should debit. You need to debit the inventory account. Inventory is also an asset account. So increase in asset should be debited. So one asset decreases, another asset increases. So simply you open an inventory account. Inventory account. Debit, credit. So since the business cash has reduced, decrease in assets should be credited 200,000. 200,000. So what is the reference? The date 3rd January, inventory. This is inventory. An inventory account debited 3rd January, cash will be the reference account 200,000. So fourth transaction, he sold 75,000 worth of inventory for 100,000 for cash. So he has 200,000 worth of inventory. 200,000 worth of inventory. Now, of which the owner has sold 75,000 worth of inventory. And by selling that 75,000 worth of inventory, he has received cash from a customer 100,000. So what is the impact here? The first impact is, you should know, the inventory balance has reduced by 75,000. Okay, so therefore inventory is an asset account has decreased, so therefore it has to be credited. So you just credit 75,000 4th January. Okay, 4th January, 75,000. We'll see the reference account. Now, by selling 75,000, you have received cash. It's an asset, increase in asset, 100,000. So 100,000 here, debit, 4th January. Reference account should be inventory, and here cash. Now my question is, we credited 75,000 and we debited 100,000. So if you debit one account and you have to credit another account with the same amount. Now in this case, what has happened? You debited 100,000, debit side is over by 25,000. Why? Your credit balance is 75,000. So therefore, in order to balance this debit and credit, the remaining 25,000 has to be, there should be a 25,000 credit. So what is this difference? The difference is, company has made a profit of 25,000. The profit belongs to the owner. So if you can remember, in our previous video under accounting equation profit adjustment, please go through my video on that profit adjustment under accounting equation. So the profit belongs to the owner. So therefore, increase in profit will be increase in equity. So therefore, please go to your equity account and credit 25,000. So you can say cash. Simple as that. Okay, so you debited 100,000 and there should be a corresponding credit entry for 100,000, whereas we had 75,000 in inventory account and the remaining 25,000 has to be credited to the equity account since it's a profit. Okay, now let's move on to the other transaction. Paid salaries 25,000. So company has paid salaries to the employees, their staff, 25,000. When you pay salaries 25,000, your cash asset will reduce. Cash asset will reduce. So a decrease in asset will be credited. Then where you will debit. So salaries means it's an expense. So please remember the accounting rule. Expenses increases. Expenses increase. So therefore, increase in expenses will be debited. So what is the dual impact? The cash asset will reduce by 25,000, whereas the expenses will increase by 25,000. So therefore you need another account. I'll just open it here. Expenses, debit, credit. So First and foremost, you need to reduce your cash by how much? 25,000. 25,000 expenses. You need to name the expense account. We can say salaries. Salaries. Here, salary expenses. You can name it as salaries. Okay. So you have to credit the cash account because decreasing asset, and debit the expenses 25,000. 5th January, the reference account is cash 25,000. So if you like the video, please go and subscribe to my channel. Thank you very much.